Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, April the 11th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data today. Across the pond in Great Britain, we got CPI coming in slightly higher than expected at 2.3%, was expected to be 2.2%. PPI input came in at 0.4%, was expected to be a negative 0.5%, so much better than expected there. And then core CPI consumer price index came in line with expectations at 1.8%, and PPI output came in higher than expected at 0.4%, was expected to be 0.2%. Then here in the United States, we got JOLT job openings came in at 5.74 million job openings versus the expected 5.59. Good sign for hiring on that aspect. And then later on this afternoon, we have Kashikari, who is a Fed member, FOMC Fed member, speaking as well. And that's about all for that. We also have a 10-year bond auction going on, which isn't really going to affect us that much. But on to the overall markets now. We got crude oil slightly in negative territory. Again, we talked about this yesterday. The volume node moving higher was down here, moved up higher. Now that we've traded back up there, going to kind of create a bit of stickiness there. And not boding well for my hopes of it going down to 45.80 is what I was saying, but somewhere close to that anywhere, somewhere between 45.80 and 45 and a quarter should be a target that I still have. Hopefully we can get back down there. With the overall equity markets pulling down, that could help that thesis a little bit. Here we've got this crossover happening. It's not quite crossed over. They're just now touching, but the 50-day and the 200-day crossing over, that is a signal of bullishness in the mid to long term. Whenever we have the 9-day crossing over, that's a short-term bullish assumption in this regard where it crosses over to the high side. Now if we get the 50-day crossing over to the upside, that's more bullish to the upside. Gold up though quite big today, trading at 1274 and a half, basically because the overall equities are down on the day. So you can see here we got the bonds moving higher as well, up almost a point, just shy of it. It's probably 31 bid at even right now. That's how we used to arb it on the floor, 31 bid at even. That's a 31 to make the difference between even bid at 1 to arbing signals. So 31 bid at even right now, evens trade. Anyway, bonds up a full point on the day. Then we got the Dow Jones Industrial Average down almost 100 points right now, finding support on this 50-day moving average. So we'll have to see if that looks like it's going to hold. Again, if we start seeing more bearishness here, the 9-day crossing over the 50-day to the downside, then that is more bearish sentiment in the short term. Then the NASDAQ futures, they are down, probably leading the way to the most part, down quite a bit today, and kind of breaking below what we've seen has been a pretty tight range here. But the NASDAQ down over 60 points right now. And then the E-mini S&Ps, sorry, my eyes are faulting me right now. E-mini S&P is down about 15 points, I think. I need glasses, it looks like right now. But should be finding a little bit of support here. Remember, we talked about when it broke down below a week or so ago that if it gets much below this, it's going to really want to retrace down to this volume node right here, which is at 2262. So still holding up, stuck in a range, big day, down day, but the equities are going to find support right here. So we'll have to see what we have going forward. This is the overnight session right here. As you can see, we are in a pretty tight range after being stuck right there at the point of control for the time. And it's pretty easy to see that there's been a lot of time spent at that area. But once we got below that, we started seeing acceleration to the downside to test the value area low, kind of bouncing off of that right now. But the E-mini S&Ps, this, for all intents and purposes, you can see that this is pretty much where the range-bound trade has been. So nothing really alarming at this point for the bulls, but bears keeping their fingers crossed, I'm sure. With Whole Foods, they just blasted the upside basically on some chatter, but for the most part was buy the rumor, sell the fact. So I started seeing this pullback today and decided to step in there because the implied volatility percent is quite high. If I can pull this up, we can see that it's kind of really spiked to the upside as of recently, and it's well above the 50 IV percent. Most of that kind of creeping in for earnings, because remember, we're doing earnings season coming up basically next month. We're going to have all kinds of earnings coming out, starting to trickle in here this week with a couple of airlines and the banks. Banks are usually the ones that lead off the earnings season, so we're going to be starting off with those. But with Whole Foods, decided to take advantage of some directionality and high implied volatility. So I went into the April and sold the 34.5 calls, and I collected about 25 cents for those. So a bit of a pullback. If we can get it to retrace a little bit more, I'm going to be able to collect rather quickly. Don't know if I'm going to get the volatility contraction in order to allow me out of this trade rather quickly, but it only has about 11 days to go on that. The other thing was, yesterday I was trying to get out of Macy's and probably let it ride a little too long. Macy's is slightly down on the day, but can't get quite 50% the width of my, or 50% of my max profit on that. I collected 50 cents at the onset, was trying to get out yesterday for around 20 cents. Got pretty close a couple of times, but it's gotten a little bit away from me today, and don't think I'm going to be able to get out of those for 20 cents today. This is what I was talking about. This is what I'm loving right now, is we've got VIX finally moving to the upside, you guys. So that's allowing a lot of the retailers actually are the ones that are seeing most of this. Target's up in the 90 percentile and a few other ones, but there's some Kohl's, I think, is up in the above 50 percentile. A lot of the retailers have moved higher, but they're also the ones right after the banks that are going to start seeing some earnings coming out for them as well. So that's part of their volatility spike. But if the VIX is spiking, that really means that there's getting a lot those premiums in the option montage, or the listing of all the options, is gaining value exponentially as well. So that's good for an option premium seller like myself. I love seeing this kind of to move to the upside. So I'm looking at a lot of opportunities to try and sell premium. A lot of them have earnings coming in right in this area here in April-ish. So, in May. So might be able to just take advantage of that during the earnings season. And speaking of earnings season, we've got this series of earnings trades to implement during earnings season, and it's going to be wrapped around that binary event. The binary event is that release of the earnings, and I'll show you how to take advantage of volatility contraction in those underlyings and increase your probability of success. So go to protraderstrategies.com, sign up for that. It's a 4-part series. It's going to be a really good one. It's something everybody who is trading options needs to know and have in their quiver to take advantage of these types of situations where you know volatility is going to crush, and you can be directionally wrong and still make money. So go check it out, protraderstrategies.com. That's all I got for you today. If you can't take that, take it easy.